G'day there. Welcome to the closing bell. I'm working on this on the Thursday, the 23rd of Feb. So I will have missed a couple of days trading. But the picture is sort of taking shape on what I've been saying to you the last few weeks. I think stocks starting to react to the big uplift in rates over the last sort of month. Basically, this is the 2-year chart. I showed you this last week, so I'm going to show you different charts today. But just to recap, the 2-year yields have been falling for months based on people's expectations that they were nearing terminal rates in the US. And that has changed. The market now thinking higher for longer. I'm sure you've read lots of articles about that. But this is how it looks with the market changing their expectations of how things are going to look over the next couple of years, and rates racing up to where they are currently in those 2 years. But they are going to head higher. So, we're going to be seeing rates heading up above 5% probably in the US. Stocks are starting to react to that. And I've been showing you over this last few weeks why I thought things were going to roll over. And we're not quite at the point yet where it's really going to start tanking, but we're getting close, aren't we? This is just the S&P 500 on a daily. And I've been showing you and saying this 200-day moving average. I mean, everyone sort of knows that if you're around the markets, that is a pretty important one. That's down around 39.50. I just gave you those lines in the sand, the old high from last sort of August, September, up above 4,300 in the S&P. I've really got clear lines in the sand. And the last couple of weeks I've been saying here that, look, I think it could tip over. And we're starting to see that, but it could find support at the 200-day and take off. I'm not going to say I know exactly what's coming next. But we are starting to see the selling pressure that I thought would happen. And we do have that 200-day now pretty close. It's only going to take one bad night, isn't it, to slice through that. So if the selling does come out soon and it slices through there and doesn't find support, that's when I think we could be in for a bit of a bad period. Where we could be finding, where is the support? It's still a long way from retesting the low of the whole correction. So, we're not at complete panic stations, but, it's just in that area where I'm thinking, watch out for what could come if the selling continues here. So it is sort of taking shape on what I've been saying. So I don't want to just repeat myself if you've been watching these. But basically, the things I've been saying are taking shape. So, just be a bit wary out there in the immediate future. Now, this is the NASDAQ on a monthly basis. And if you're looking at that, would you say that the selling's over? It's trending pretty hard. Monthly downtrend, this is where you expect to see the selling pressure around that sort of 10-month exponential, which is the red line, and the 20-month simple. It's still getting hit from where you'd expect it to get hit from. And, back under the 10-month exponential, it's sort of looking like a continuation. There's nothing really about this chart that's making me say I want to buy it yet. And with the rates starting to race higher again, obviously the tech stocks are the ones that are quite interest rate sensitive, and they are still looking fairly sketchy to me. So let's have a look at a couple of the key ones. Here's Amazon. What an amazing run that's had, going from, near zero, up to $200. And, they've had lots of stock splits and that sort of thing. So it was up at thousands of dollars, couple of thousand. But you can see it's really come off the boil, hasn't it? long-term downtrend. It really is selling off pretty hard, getting hit from the 10-month exponential, and no real signs yet that that selling pressure is finished. Google as well, still looking pretty dangerous, like it wants to go down a bit further. That's had an absolutely massive run, but you can see it's coming off the ball pretty rapidly, definitely in monthly downtrend, getting hit from the 10-month exponential, and not that far off the lows. So, you could see another leg down. Looking at Meta, you can see it's had a terrible old move. This is from the listing. Massive run up to what, $380 odd, and huge sell-off down into that buy zone, which you can see there. So massive retracement of the whole wave higher. It's turned around, had a huge run, hasn't it? But back to the point of control where it's finding selling pressure, still in very strong monthly downtrend. But, it definitely is a nice strong move out of there, going from $80 up to 170. So perhaps it's just going to pull back and then be a great buy. But just right now, looking a bit dangerous to possibly fall over again in the short term. And I just wanted to show you the US dollar quickly, rates rising higher. You can see that, the US dollar's had a massive run over the last year or so. And as inflation started to peak and people started to get bullish, we saw that US dollar sell off with rates falling, but it's still in long-term uptrend. And basically it's pulled back to major support. This was a range that the US dollar was in for 5 years. This is a very long-term chart I'm showing you, going back to 1998. So you can see it's been a strong breakout in that US dollar, and did end up heading up to the sell zone of that massive wave down from 2002 to 2008. Did end up getting hit from there, but it's pulled back to pretty major support, that 20-month simple moving average, and also the top of the range of the last 5 years. So it makes sense that it's turning up here with rates taking off again. So you could really be at the early stages of another strong wave higher in that US dollar, similar to what we saw a long time ago, back in 2002. Very strong uptrend happening there, back to the long-term moving averages, and then another wave higher, back to the long-term moving averages, another wave higher. So there's, a couple of years of trading going on there. So it sort of feels like it's in that early stages of a US dollar bounce out of here. And of course, that's going to affect commodities. So let's just have a look at a few of those. This is the gold price on a monthly basis. I was saying to you a while ago, that I expected to see a bit of a correction because we can see quite clearly we had that big sell-off in 2022, and then we saw that big nice bounce in the gold price, and I explained that to you at the time, being the false break of the low of the correction from the last couple of years. So prices selling off, stopping lots of people out, and then the false break where it turns back up, and I gave you targets back to that point of control. We reached that. Now it's rallied quite strongly out to the other side, and that's what I was telling you about a few weeks ago, that it had rallied up to the sell zone of that wave down, and pretty much hit that bang on, and then the selling pressures come in. Now the US dollar's turning up. There could be more downside in this gold price for now, especially if it does actually head back under last month's low and back under those moving averages, and that's around 1800. So if the gold price falls back under 1800, I'm really getting targets back down into the buy zone of that wave. So you'd want to see buying support in there. if it was to happen. So if we do actually break 1,800 bucks down into that area, I'd really want to see the buying pressure emerge again out of there, because I do have pretty much strong sense that if this whole thing falls over and gold's heads under that $1,600 low from last year, it's very dangerous under there. Gold could be in for a really big sell-off underneath that level. So let's hope that's not going to happen. But depends on the path of interest rates, of course. My sense is that we are going to reach some sort of peak over the next few months. Rates will top out, start lowering again, and I think gold will find support and could really turn back up. So I'm pretty much long-term bullish on gold, but just right now, wary what happens underneath $1,800. And just finishing up on a few key commodities, copper is actually performing pretty well. Most other commodities are tipping over. So this is a monthly chart going back, to 2009. I've been following this along. This was a huge rally from 2020 to 2021, and prices have pulled back to around that point of control. Found support, monthly buy pivot, another month higher there, but is sort of tapping up against the sell zone of that wave. So I'm just a bit wary around here because the monthly downtrend is still in place in copper. So basically, if copper does fall over again, back under sort of that $4 region, sort of $3.75 to $4, it's looking pretty dangerous because it is still in monthly downtrend, and we may be in for another wave lower. That's if growth really comes off the boil. But it's not doing that yet, and it is definitely the one commodity that is performing quite well in the face of a strong US dollar. As a comparison, this is zinc. You can see, again, this is the monthly chart. So there's the big rally in commodities over 2020, 2021. Big pullback. Now, we've had that rally on the back of the China story, but the heat is coming out of that. Now, so zinc seeing a bit of selling pressure. Nickel also under pressure, selling off over this last month. Still in uptrend, which is all good, so it might find support, but it is coming under pressure in the short term. Lithium as well. You can see on this ETF, monthly downtrend in place and starting to see selling pressure around that area you'd expect. Back under those lows, you may be in for a bit of a sell-off. I'm long-term bullish, but that doesn't mean we're not going to see a big clear out of positions before things turn back up. So just looking a bit bearish right now on lithium. Similar story with rare earths. This is a rare earth ETF on the monthly basis. You can see there long-term downtrend. It's been a nice strong rally over the last few years. I think that's going to ultimately be the path of things, but we are seeing weakness, aren't we? And it's just starting to sell off again in this last month. So, what happens underneath those lows? We may be in for more of a correction in that rare earth space before turning back up again. And look, I'm looking at this sort of stuff as really great long-term buys at some point. So we're going to follow this along. And if we get a big clear out and you get a chance to get on that clear out, I think on a multiple year time frame, you're talking about some great opportunities that are going to throw themselves up over this next period. So that's it. Just wanted to give you a quick roundup. Let's see what happens in this S&P 500. We are seeing the selling pressure where I'd expect. 39.50 is where I'm thinking momentum is going to start accelerating to the downside below the 200-day moving average. So let's see what happens here. It's going to be very important because we have the monthly buy pivot there. I'm wondering what happens if it does sell off and then catches the buying pressure. Let's say inflation comes off the boil rapidly. We reach peak in rates. it could be that it's a bit of a dummy, the sell-off, and then it turns up and all of a sudden breaks out above that 43.50 level, and then we want to get on board if that happens. But I don't think that's my favorite right now. I think the selling pressure is going to take over, and it all depends how far that selling pressure goes. And if we break below last year's low, it's pretty dangerous for a big sell-off. And if that happens, I'll be loading up the truck down there if we do see a really big clear out. And I'm just hoping we do see a big move soon so I can start trading more aggressively. All right, cheers. That's enough for today. I'll come back with more next week.